Welcome to the Cryptonomatron. Today's news stories. The biggest news story of the last 24 hours is obviously Congress held its first hearing on initial coin offerings, ICOs. And, you might be thinking, why are they regulating, why are they holding meetings about these ICOs? They're doing fantastically well. Well, it's the job of governments to interfere in your lives. It's the job of them to protect you, is what they'll say to you. But in reality, they just want to earn off it, let's be honest. And at the moment, they want to control, regulate, and earn. They don't want it to be a threat to the status quo. Anything that's new, anything that's a threat needs to be brought to heel and brought to bear under their control. So they're a bit, I think at the moment, the US is a bit nervous because obviously their US dollar Ponzi scheme is wobbling a bit. They're printing trillions of dollars every year, and of course President Trump just signed a new agreement to extend the debt beyond $22 trillion. It's an unsustainable system. They know it, and some alternative has come along, cryptocurrency, and naturally they're very, very nervous that the house of cards could fall down. And ICOs allow you, me, everybody to invest in new technology and new companies, but it's not exactly equity, and that's what they're sort of toying with at the moment. They don't really understand where the tokens that you get for your investment stand. Are they a currency? Probably not. Are they a security? A lot of them are not. Some of them are. So there's all this discussion going on about exactly how to define it. And one of the other issues that they have as well is, of course, protecting the investors. That's what they always say. Governments are here to protect you. If you're a sensible investor and you do your due diligence, you've only really got yourself to blame for investing in anything. And we can include a multitude of different investment opportunities in that, not just ICOs. But anyway, they've been discussing it, and there were a few highlights that this website brings up. Georgetown law professor Dr. Chris Brummer said that Congress should expand the SEC's authority, allowing it to regulate the full scope of digital tokens cropping up. Coinbase Chief Legal and Risk Officer Mike Lempres explained that his company is currently refraining from supporting ICOs because of the regulatory uncertainty. He says, "We are waiting for the dust to settle between the SEC and CFTC." And Coin Center Research Director Peter van Valkenberg pointed out the redundancy and inefficiency of state-level regulation. Now, I'll post a video below, a Bloomberg video on YouTube, where Peter van Valkenberg discusses yesterday's hearing. And it's just a brief video, but it gives you a sort of overview of where he's coming from, and he's quite well spoken, and he can articulate his points very well, so it's worth watching. So the House Financial Services Committee asked some questions, and the usual subjects were brought up, of course: hacking, use of digital currencies by criminals, terrorism, I think was mentioned as well, unfortunately, defining securities, protecting investors, etc., etc. And there was a range of opinion. And the two polarizing opinions were from Tom Emmer, who said, "I hear elected officials who don't have any concept of what we're doing here, talking about we have to go in and regulate." And he went on to advocate for clarity over further regulation, which I think is a very sensible and the correct way to move forward. But however, Brad Sherman, who's a Democrat, I think, for California, called cryptocurrencies a crock and went on to express skepticism about their usefulness. Of course, Brad Sherman, he's not really impartial here, is he? Let's be honest. He is actually a Democratic member of the United States House of Representatives. One of his biggest campaign funders is, funnily enough, if it'll load, Allied Wallet. Now, what do? Well, they provide merchant payment services, business to business payment services. There you go. So, they accept credit cards. They are one of the companies that cryptocurrencies are about to disrupt and even destroy. So how can you take him seriously when he's been, his campaign, his entire career is being funded by companies like this? Of course he's going to stand up and call cryptocurrencies a crock, because they threaten his livelihood. They threaten redundant companies like Allied Wallet, because they're trying to cling on to an old technology over a new one. I'm not a fan of Coinbase, I must admit, but Barclays have struck a deal with them in the UK to allow quicker payments. I think U.Okay, which is a lender from Barclays, has struck a deal with Coinbase, and it'll make it easier and quicker for people to buy cryptocurrency from their bank account with Coinbase. The Verge developer's Twitter account was hacked yesterday as well. The developer got doxxed, and if you don't know about Verge, it's a cryptocurrency that's meant to be one of the most advanced privacy currencies available. I've done a video on it many weeks ago. You can go back and have a look. It had a very good run late last year, early this year. It went from under a cent, about half a cent, to about 27, 28 cents. So there was a lot of gains to be made. It's got a sort of a cult following, I would say. It's an interesting cryptocurrency. It's another one that's very polarizing in the community. A lot of people will back it to the hilt, and then there's people that on the other side that think it's just a lot of rubbish, and don't believe the developers, and don't believe it will do what it says it will do, and so on and so forth. So this caused caused a little bit of amusement on Twitter yesterday when this came to light. Apparently the developer's account on Twitter was hacked, and then it bragged to the account's 265,000 followers and attempted to scam them all out of cryptocurrency. So stay vigilant, peeps. So Hashgraph, the self-proclaimed blockchain killer, has introduced its new Hedera platform. Now, the Hedera platform is the first distributed ledger network to implement the Hashgraph technology. Why is Hashgraph, so confident that they can kill blockchain off? Well, pretty much from the scalability of the network and also the advanced security. And why is this the case? Well, as you know, current technology, Bitcoin, Ethereum, is not exactly scalable, and that's a problem. And Hashgraph is. So Hashgraph can do, tens, maybe hundreds of thousands of transactions per second, whereas Bitcoin and Ethereum do maybe 5 to 20 perhaps on a good day. We're seeing new blockchain emerging that can do 1,000 transactions per second, 10,000 transactions per second, and even blockchains like Credits, new ones that are claiming they can do 300,000 to 1 million transactions per second. So very interesting. However, why does Hashgraph have the advantage? Well, they say their consensus algorithm, it works in a far lighter and more efficient manner. They are using asynchronous Byzantine fault tolerance, or ABFT. It's resistant to a distributed denial of service attacks because no single node possesses special voting powers to create timestamps. It eliminates any singular weakness in the ledger. They still are quite vehement that if they can deliver, then it's going to make blockchain obsolete. So it'll be interesting to keep an eye on Hashgraph. So I spoke about Vertcoin doing their website the other day, but I didn't mention Vertpig. I did a little bit more research into Vertpig. Now, it turns out they are looking to implement a sort of Coinbase for Vertcoin. And that's very, very exciting, because that'll allow you to buy and sell Vertcoin with your fiat currency. Now, at the moment, Vertpig only supports selling your currency for fiat. So selling your Vertcoin for fiat, but they're soon going to try and implement buying Vertcoin with fiat. So it'll be like a sort of Coinbase for Vertcoin, which is a very exciting opportunity. And it didn't really cause the Vertcoin price to go up very much at all. So, my reasoning behind that is we're in a bear market at the moment. It's going to be very difficult to generate any hype for any reason. And normally we would have seen Vertcoin rise a little bit on the news, but that wasn't the case, and other cryptocurrencies have suffered the same fate. As I've said already, the market is hype based. Other things that are happening like US Senate hearings, FUD of Google banning ads, Mt. Gox coins, Bitcoins being dumped on the market, Japanese exchange FUD, etc., etc. Those are all contributory factors to the current malaise, but malaise is the key word. There's a malaise about cryptocurrency and Bitcoin from the general public at the moment, and there's uncertainty as well, which is causing a lack of institutional and a bigger investment to come in. So the bear market, in my opinion, is set to continue, and this is affecting currencies like Vertcoin from getting the recognition in terms of value that they deserve. So Vertcoin's launched Vertpig only for a limited number of users in the U.K, so they're trialing it at the moment. And again, you can only sell out to fiat at the moment. But it goes to show what sort of vision they've got. Vertcoin's a very solid cryptocurrency. I do think, however, the bear market will sort out the wheat from the chaff. I think we're going to see a lot of cryptos disappearing during the next few months. The ones that can't hack it, the ones that are not worth anything, and more importantly, the ones that don't offer anything either technologically or to the industries they are claiming to represent. There's a slew of ICOs coming out that are worthless. There's a lot more cryptocurrencies in the space already that just have no value really at all, and we're going to see them, I think, go down in value and possibly disappear as well. So Invox Finance, the pre-sale is live. You can join it today. It's not the best time to be launching ICOs in the current bear market. Ethereum's back down. It's heading back towards $500 in my opinion. We'll look at the markets in a second, but it's not the best time to be launching ICOs, but we've not got a crystal ball, so I guess Invox just went ahead with their original plan, and the pre-sale is live. I did a review on Invox Finance a few days ago. It's an invoicing finance platform that allows small businesses to get paid for their invoices a lot quicker and thus maintain their capital inflows. So it's a very good project. The only big rivals it's really got are Populous, is the main one that I discussed during the review video, but also Debitum is a possible or potential rival in future, and there are another couple as well that are attempting to do similar things. But it's a very solid project. I thought it was very good, and maybe worth having a little look at. The link is in the description below. So I posted on Twitter the other day that we were going a lot lower and we had not seen the end of this bear cycle, and I believe I'm still right. I think this is going to continue for a while now. Again, my opinion on it is its lack of interest in general in cryptocurrencies and a lack of institutional investment. Institutional money pulled out at the end of January and hasn't really gone back in lock, stock and barrel yet. So we're seeing malaise, we're seeing a sideways movement of the markets, and sideways and down really, which isn't good for anybody. Everything is tied to Bitcoin at the moment, so we're basically seeing everything go down when Bitcoin goes down and everything go up when Bitcoin goes up. Such is the tie between the altcoin and Bitcoin. Now what we really want to see is Ethereum break out, separate itself from Bitcoin. More Ethereum pairings with the other cryptocurrencies would be good, and then we can maybe see some movements of individual coins with other pairings. But at the moment, it's looking bleak. Again, most everything in double figures. There'll be a lot of people that are crying in their porridge this morning because they've lost a lot of money. Again, I'm a long-term hodler. I will hold on for dear life. I believe in the technology, and I believe, more importantly, I believe in certain cryptocurrencies and tokens that I'm invested in. I think that the ones I hold have got real value in the future, and the projects that they're part of are definitely going to be around in 3 to 5 years time. That's what you've got to really look at in your portfolio, is what are you holding that's worthless, because you might lose all of it, and what realistically is going to be around. But this drop in price has been, obviously it's been the general malaise, as I said, but it's not been helped. It's been compounded by the news yesterday about Google banning cryptocurrency and ICO adverts. So that's why we're seeing complete carnage today. Hopefully we'll see a little bit of a bounce in the next sort of 24, 48 hours, but I'm not concerned that much. I will sit on what I've got and wait. And even now you've got to look at this as maybe a good entry point to some of those cryptos that you missed first time round. Now, if we look at the list here, the top 100, there's just some bargains at the moment. NEO at $67 is an incredible bargain. EOS has now gone under $5. Keep an eye on EOS. There are ICOs coming on it this year. It's going to be big. There are there's VeChain as well at $3.50 is an incredible bargain. But again, watch for your entry point when you're going in. And put your money in accordingly. So, there's a lot of bargains out there. Just be careful and be cautious and don't get caught with your pants down, I would say, at the moment. So no surprises, there aren't many gainers. In fact, there's only like a dozen coins that are in the green at the moment, and that tells you everything you need to know about the state of the market. All the ones that are volatile at the moment seem to be quite small market cap shit coins, if you don't mind me saying. There's a couple in there that have maybe lost more than they should have. InvestFeed, I think, is one, and Nucleus Vision is suffering as well because it had a pump earlier this week. So nothing really to report there. And if we look at the recently added coins, there's been a couple of recent additions. I don't know about this. GetX, Loom is interesting. Haven is interesting as well, and Starika we'll take a look at a bit later on. But the biggest volume is the Loom Network at the moment. As we can see, there's quite a lot of money going through it. 9,300 Ether in the last 24 hours. Total supply $1 billion seems to be a popular number for cryptocurrencies these days, and with a price at just over 1,000 Satoshi at the moment. So what is Loom Network? Well, it is a next generation blockchain platform for large scale online games and social apps. So basically how they describe it is World of Warcraft and Twitter on the blockchain built on Ethereum, called a dApp chain. So it's like a side chain which can be forked on its own. So you can fork games if you like in other social apps. It looks quite interesting actually. I've not really sat down and gone through it, but there it is anyway. It looks quite interesting. Potential investment opportunity at the moment. Well, I'd be taking a gamble if I said anything was a good opportunity at the moment. But I think ICOs are going to struggle, especially those that are trying to raise funds at the moment, and also those that have just launched on exchanges. They're all going to struggle because there's no positivity at the moment in the market, and there's no buzz, there's no hype to help them gain traction. So unless it's a very, very special project, then I would be very careful what you're doing. However, that's not to say that Loom in the future won't be a very, very good investment opportunity. So it's one certainly that I'll be keeping an eye on, and I suggest you do the same.